When you look at how lender appetite is impacted by low oil prices, this is not the first downturn in oil prices the region's experienced. We remember the days of $20 oil. And a number of the successful projects in the region have been financed based on oil price assumptions at $30, $40, $50 a barrel. So I think it may eventually lead to an impact on liquidity and appetite to invest. But I don't think, from a credit perspective, that the structures will necessarily be impacted. They've already been designed to withstand these shocks in some degree. There'll be a bit of filtering for the best projects will succeed and proceed. But oil price shocks are it's not the first time we've seen these in the region, and it won't be the last. I suppose fundamentally questions are being asked around, is the oil shock different this time? Is there some systemic change? I think people are somewhat cautious about that. But I think fundamentally they will look at that as being a price assessment issue, and it'll be structured into the transactions. When you look at whether the drop in oil price will impact the way in which they price deals, I think the answer is no. That essentially becomes a risk equation. It may impact it in the sense of banks themselves and their funding having increased costs over time with low oil prices and maybe less liquidity and deposit liquidity, and which will push people to look at alternative forms of funding. Project bonds is one of those, and how do you get those deals done in the Middle East? There's been very few of them. And I think a bit like the early days of Islamic financing and structuring Sukuk, there's a certain notion among sponsors that there is a hassle element that goes with including a bond in your financing. I think the more of them that get done, that fear will lessen. And I think, but the technology is well developed. I mean, we've seen deals like Shuweihat 2 that have recently been banked to the market, and the structure's there. The time has been invested in developing structures that work. So a bit like the entry of Islamic structures, people are now comfortable with those. The same as now happened with the bond. So I think people should be less concerned as to the time and inefficiency impact of introducing a bond. The issues still remain about bank pricing and whether a bond can compete in that market. But it is an alternative source of funding that's available, and people have invested in structures that work today. I think the Bonds, Loans and Sukuk conference is one of the landmark conferences, I think, now, and we see broad attendance at a very high level. And I think that the issues that you are discussing are always very relevant to the market, and the importance of the conference to us is the participation, and the participation in the issues that are relevant to the market today. And that's why we find Bonds, Loans and Sukuk as an attractive event for us. So. Being a sponsor of the event, I think it's important to be present in the discussion. And although we have a premium space in the market, it's just important to attend the event and for us to be seen here, and also for our voice to be heard in the issues that are relevant.